Hello, welcome. My name is Kenneth Page and I'm here with Adulting 101 org. Here at Adulting 101, our mission is to influence a generation of young people to help build a strong foundation for their lives and to position themselves to better understand what they can contribute to this world. Through transparent, vulnerable, and honest conversation, we will teach meaningful, impactful, and applicable life skills that young people need to successfully navigate life. Today, we're going to go into part 2 of our 3-part series on credit. In part 2, interpreting credit, we pick up where we left off last week when we finish up breaking down the components of a FICO credit score. We start talking about how to interpret credit, what's good credit, what's bad credit, and what that will allow me to do. And we begin our conversation on credit in life as we dive into the components of credit as it relates to relationships. We have with us the amazing Serena Dene. We also have Kalendra and we have George joining us on set today. So go ahead, grab some notes, grab some paper. And if you haven't seen part 1, I highly recommend that you stop this right now and go check out part 1 so you can get caught up. But grab some pen, some paper, get ready to take some notes, and let's jump right into this conversation.
Now, it says new credit on here is 10%. New credit, and you used the word inquiry earlier. All right, so I understand that inquiries have the form of a hard inquiry and a soft inquiry. I can't pronounce inquiry. A hard inquiry and a soft inquiry. All right? So, Kalendra, have you ever heard the difference between a hard inquiry or a soft inquiry?
Um, yes, I know like the difference is the time that it stays on your credit that it negatively affects it.
hmm What about you, George? Have you ever heard of credit inquiries?
I have not, sir.
All right. So, Serena, will you explain to us what inquiries are and then what's the difference between a hard and a soft inquiry?
Yes. So an inquiry is when they pull your credit to see if they should give you whatever it is that you're applying for. So when you are going to a car dealership, 9 times out of 10, they're going to pull your credit and they're going to run it to 3 or 4 different banks to see who is going to be willing to take a risk on you. Those are hard pull. The first one is normally a hard pull, and then from there they can do soft pulls because that hard one told them what's there, and then soft pulls from there is just like, okay, let me run it to this person, but they have a good idea of what's happening. The hard pulls, of course, is exactly what it sounds like. A hard pull it holds a lot more weight. It will stick longer. And then the soft pull, it doesn't do as much damage. They kind of, to my knowledge, and correct me if I'm wrong, K Page, but to my knowledge, they still hold the same amount of timing wise. Like you can still see them on your credit as inquiries, whether they're hard or soft. But the hard ones just hold more weight.
I think that one, what happens with the soft pull, I don't know in depth. I think it might deal with the institution that you're working in because where I work at, when we pull credit reports, when we do that, there are certain scenarios where we'll do a hard inquiry, we'll do a hard pull, and I know that's going to be on your credit report. Now, at certain times, for certain reasons, we'll do a soft pull. And when we do a soft pull, there's information on your credit report that I'm able to see. However, it doesn't even pull up on your credit report. So when we do soft pulls for certain reasons, that doesn't appear on the credit report. But when we do hard pulls, that does show up. But I can like at least when we do it, we never do soft pulls for new customers. If you're a new customer trying to get lending from our institution, we're gonna do a hard pull. But in certain, and I will specify certain because every institution has different rules and credit standards that they follow. But again, when we do utilize the soft pull at times, that does not show up on your credit report. So, with that being said, like there's going to be certain financing, certain lending that you have that you get it the first time, but because you keep it, they're going to keep pulling your credit in the future. Like there's certain business products, like let's say you have a business line of credit and you're a guarantor on it or a co-signer, which we're gonna come back and talk about co-signing. You know, every year we review it, so every year we pull your credit again. When a lot of mortgages have what they call in a 5-year call option or a 10-year call option, which to simplify it in layman's terms, a 5-year call option means, yeah, your mortgage is for 20 or 30 years, but we reserve the right to every 5 years to decide if you're going to keep that mortgage. So we'll actually look at your credit again and pull it to make sure everything's on the up and up. So when you get a mortgage, you know, your mortgage is gonna keep getting pulled. So certain things that you have, you're not always going to be able to avoid inquiries. But the best thing that you can do is to limit the amount of inquiries that you have on your credit report. And Serena, you said something interesting about the car, having your car loan, getting that pulled. Uh, George, do you know what happens when you go apply for a car loan? How
No,
that works? Calendra, do you know how that works?
Unfortunately.
You got a car, you know, Calendra recently got a car in her own name. You better do it, girl. So, but what happens is, George, when you go buy a car, and if you're getting financing through the dealership, it's called shopping your rate around. They create like this package and it has your credit information and the cost of the vehicle. Now, the car dealership, they're not a bank. They don't have money. So they have to find a bank that'll give you the money for the car. So they shop it around. And what that means is they put it out there on like, they just throw it out there. And all of these different banks will come in and say, let's see if we'll take this, and they click on it and run your credit. So every time a bank is shopping around for your rate, your credit gets ran, which means if you have good credit, the first one or two banks might take it, one or two. You got bad credit, it might take 17 banks to look at it for one to finally decide, hey, we're going to take this loan. Now you got 17 inquiries on your credit. So it kind of shows like, you know, kind of bad credit begets more better credit, right? And the
Can I
last
add one
thing,
thing?
yeah,
Right.
So, Kalindra, with you having a new car, that brings me back to my point of the length of credit history. Your car loan, and every time you make a payment on that car loan, you are building that payment history and you're extending the length of your credit history. But what people don't realize is that you can actually, like when you're making the last payment, let's say you're at the end of your loan. Most of us have a 60-month, meaning that you have like a 5-year car loan. In most cases, that's what it is. At the end of your loan, when you make that last payment and you're super excited, you did what you're supposed to do, you're getting rid of this car payment, call who your loan is through and you can tell them, hey, I just made my last payment. I do not want this reflected as a closed account on my credit. Why you want to use that option if you choose to is because once they close it, that payment history then closes out and that length of history goes away because it's no longer an open account. So your score is going to drop. I hear that all the time where people say, oh, I paid off my car and I thought that that would be a good thing, but then my score went down. That's why. Because you closed it out, so you cut off both of those categories. Now the amount owed is a good thing. You drop that debt, you know, you cut out some of the debt that was reflected on your credit, but that length was just erased. So you can tell them to leave it open. It's no longer active debt, so it doesn't hurt having it open, but it won't cut off that payment history or, you know, the years that you've had this car in your name. Does that make sense?
That makes a lot of sense. I kind of wanted to add to the whole getting a car from a dealership, going through the dealership for the loan, or for the, you know, for them to find a bank that would give you a loan. Personally, I did that the first time, and like obviously, I still see those hard inquiries on my credit now. Personally, I would find a bank that you trust. Me, I went to my own credit union, and they told me, you know, they wanted the VIN number of the vehicle. They obviously pulled the history of the vehicle up, and they said, "Hey, this is how much we believe this car is worth." The dealership that you're getting it from, they are overcharging you. So let them know this is how much we're going to give. And if they don't want to, negotiate from that price, then move on to another car. So it helped me because I didn't know that they were overselling the car to me. And I got the car that I wanted and I negotiated for it. So yeah, don't go through the dealership.
Yes, awesome. Credit unions are the best.
Mm-hmm. My mom, she works at the post office, so that gives me access to her credit union, the United States Postal Service, and I love that credit union. In fact, you'll find a lot of times when you're a part of a credit union, you'll get favorable terms that you wouldn't get if you were at a regular bank. Like sometimes their credit threshold, like when you're dealing with banks and lending institutions, like there's your credit score and then there's a rate attached to it. It's going to go like that. Whereas most credit unions have cutoffs, like if your credit score is this or higher, everyone gets access to this. If it's this or higher, everyone gets access to that. So it does give you some kind of flexibility. And like you said, Kalindra, some protection because they're not going to finance a car for more than it's actually worth.
Mhm.
And George, you asked about collateral. That's where that falls back into. The bank doesn't want to make a loan for a car that's it's not worth that much. Why would we give you $10,000 for a $7,000 car? You know what I'm saying? Like you wouldn't even want to do that. They don't want to do it either. So the last thing that's on this chart that we talked about was types of credit. George, you know how many types of credit there is? Well,
I
this
do
was
not, sir.
what about you, Linda? Are you familiar with what types of credit is?
I don't.
So let's talk about it. Serena, will you explain this to us? The types of credit?
Yes, so there's two types of credit. There's installment credit and then there's revolving credit. And it's like exactly what it sounds like. Installment credit are things that you pay in installments over time, but they have an end date. So that would be a mortgage, that would be a car loan, that would be a personal loan. Those are eventually going to end because you're going to pay out, the remainder of that debt. But then you have your revolving credit, which would be your credit cards. They go on forever. The limit grows, but they never stop unless you stop it. And it's only two ways to stop those. Either, as he mentioned, you're 30 days late, you're 60 days late, you're 90 days late, like you're just not making the payments on it. And eventually the bank is going to cut it off because they see that you're not doing anything with it. So they will close that card. Or you can close it yourself, which I don't recommend that you do it unless it's a bank that's not really helping you. It's not really building your credit. It isn't doing anything for you. It isn't a major bank. Then I would say close it within that first year. But if it's things that you've had in your name for a length of time, you never want to close accounts. But that's what the two are.
Question.
Hmm?
So like when you were talking about, you have a 5-year loan on a car and you finally do pay it off and for your benefit so that you keep the length open, does it like do you have to pay anything to the bank for them to keep that open?
No, it's yours. You've already paid it. So no. At that point, they're going to mail you the title. It's your car. So absolutely not.
So we got a chance to go through this items, and this talks about the FICO score. A whole nother conversation is talking about like the Vantage score, how they calculate that, because they're going to use this, and I think Vantage actually kind of attempts to track trends in your credit. Trends like, there's trends in it. As a credit analyst, the interesting thing about credit is your credit report tells a story. It tells a story of your financial position. Like I can look at credit and certain life events. You can pinpoint when certain life events happen in people's lives simply based off some of the information on their credit report. So it does reveal a lot. But Serena, thank you for going over this. We looked at the five things that really impact our FICO credit score. We can see what affects things more, what affects things less, and it kind of gives us a simple either or thing to do to make sure that we're taking care of our credit. Obviously, for payment history, if we want good credit, we're going to pay stuff on time. If we want bad credit, we're going to pay stuff late. When it comes to amounts owed, if we want good credit, we're going to keep a low balance and make sure we're paying stuff off sooner than later. If we want bad credit, we're going to have a high, we're going to owe a lot of money. In credit cards, that looks like we're going to max those credit cards out if I want bad credit. When we look at length of credit history, simple enough. The longer I have credit, the higher my credit score is going to be. The shorter length of time I have credit, the lower my credit score is going to be. New credit, when we talked about the hard and soft inquiries, the more you pull my credit, the lower your score is going to be, which means the more that you apply for stuff, the lower your credit score is going to be. The less you apply for stuff, the higher your credit score is going to be. And then that last category, types of credit, where we talked about installment versus revolving, and how we have too much revolving credit on our credit report, then that's going to negatively impact our credit. So we've been able to talk about the factors affecting credit. We talked about some different things that you can do early on as far as starting to build your credit. When you turn 18, go get something in your name and make sure it's something that you're able to use. Like even if you open up a card, in particularly a secured credit card, a secured card, you're definitely going to get that because there's nothing to lose. But collateral, the money is collateral. If I have a $300 limit, I'm going to give the bank $300. And they're going to hold that just in case I don't pay this credit card off. So they have no reason not to give you the credit card. That's a secured card. So that's going to help you build your credit or just getting something in your name early on. Now, I want to transition into, we talked a lot about, just what credit is, what a credit score is. I want to really now talk about how credit is wrapped up into our lives. Because one of the things that we're talking about that we see is, let me ask you this, Serena. What is the number, as a credit repair specialist, what's the number one reason people come see you?
They're trying to buy a house. 90% of the time, they're trying to work on their credit because they want to buy a house. But the major things that I see that's affecting people are late payments and things that have gone into collection, specifically hospital bills. That's a major one that you see a lot. Every now and then, I'll get a repossession here and there, but for the most part, it's late payments and collections.
Now, out of the majority of these people, when they had the situation where they had the late payment or the hospital bill or the repossession, were they aware of how it would affect them when they wanted to go buy a house?
No, not at the moment. No, and that's the thing. Communication is key. Life happens. You may get sick, and at that point, you're on short-term disability. They're only paying 60% of how much you would typically make. You may have to take on, your child gets sick and you're out of work. Like, life happens, but you have to communicate. But you're not even going to know what's happening or what to expect if you don't ask questions. So always ask questions. If you know that you're late, call the person that you have the loan through, or call your bank and tell them, hey, I have this going on. Can I make a payment arrangement and, do this in 30 days? I'll pay you double next month, and make it work in between that time. But no, a lot of us have no idea how detrimental it can be with not communicating, especially if you allow something to get into collections. If it's going into collections, that means that you let it sit for potentially 6 months to a year before you did anything with it. Sometimes items going into collection, it takes time. That means they called you. That means they sent stuff in the mail. That means they may have contacted somebody in your family. Like, they're relentless. They want their monies. But so that means you purposely ignored it. You ignored all the red flags. You ignored all the signs. So communicate, ask questions, and Google. Google is your friend. If you want to know how much a late payment is going to affect you, Google it. It will tell you. If you want to know how much a collection will affect you, you can Google it. But just communicate. Say what's going on and ask questions.
I know there's even been a situation before when I knew that I wasn't going to have the money to make this credit card payment. Rather than just miss it, I called them. Hey, I'm going through such, like, they want to know why. You can't just be like, I can't make it. They want to know why. They want a reason. So, hey, this is what's going on. I had X, Y, and Z happening. I'm not going to be able to make this payment. I really don't want to jack my credit up. What are my options? And they'll actually come back to you and say, okay, well, the first thing they look at is, what kind of customer were you in the past? Is this a repetitive thing? No, prior to this moment, I had a history of making payments on time. So when I say, hey, I'm struggling this month, what are my options? They say, well, Mr. Page, you've been a customer for this long. You've kept it in good standing. Here's what we can do. And they'll actually walk through options with you. Okay, you can't afford this much. How much can you make? At a later date, will you be able to pay this? Let's get this payment plan. Let's do something, because they really want you to keep the car. Because they're making money off of you. So they want you to keep it. So if they're willing to work with you, it's mutually beneficial. You don't jack your credit up, they still keep on getting paid. Now, Serena, when you said people normally come to you when they're looking to buy a house, I figure what happens is they go buy a house, they go shopping, they get their credit pulled, and they see their number and don't know if this is a good or a bad credit. Kalendra, so credit scores range. The lowest is 300, the highest is 850. Do you know about what a good credit score is?
Like 700.
What about you, George? What do you estimate a good credit score is?
You said the highest was 850.
Mm-hmm.
Yeah, about 700, 750. It's good.
Yeah, that's you want that 7 up there in the that's the ideal place you want to be. And if you see this chart right here, it really breaks down, the different credit score ranges. And you guys both set 700. Serena, what's your opinion? What do you say about a good credit score is?
At least a 700, which I hate to say, but 74 million people in the United States have a 599 or less. But yes, anywhere from a 700 and up would be considered good credit, because at that point you have established credit, you have good payment history, you've been handling things over time, so you're more likely to be trusted with things. So at least 700.
At least so that's that golden range we're aiming for, about 700. And you see, and when you look at this chart, it has good and fair, which is 650 to 699, then 700 to 749. And it's true, you will be eligible for most loans with good rates. The only reason that you would get denied is that we don't have the cash flow to support it. Now, when you get down to here to this poor in this very bad range, I'm talking anything under 650, 600 to 650, you might get something here or there. They got programs that they can work with. But once you get to very bad, nothing. You're not getting nothing. Now you're paying. If you do get a car, you're gonna pay an extra, $5,000-$6,000 on that car than a regular person would pay. So ideally, we want to aim to get a 7 starting out on our credit.
Calandra,
That's
you brought up a good point when you said that the credit union, they told you that you would be paying more than what that car is worth. Most of the time, when your credit is at a fair or lower, 9 times out of 10, you're paying 60% higher for that item than it's actually worth. Even when you go to get an apartment, of course, they pull your credit to get an apartment to know how much of a deposit you're going to put on. How much of a risk are you going to be able to pay your rent every month? Even that will be higher than the apartment is even worth because your credit is not where it needs to be.
most people think that credit only affects them buying a house. So it's also involved in the type of rental rates we get in apartments.
Absolutely. They run your credit to get an apartment. They run your credit to turn on the utilities in your apartment. You can't get lights without a high deposit if your credit is not good. You won't qualify for certain jobs if your credit is not good. Especially with you being in criminal justice, they're going to pull your credit because how are you going to work at the courthouse and you can't be trusted? If you're in the finance arena, they're going to pull your credit to make sure you can be trusted with money. Your car insurance, they pull your credit to get your car insurance. Literally, your credit is just everything. So you want to make sure that you're in good standing. Not to mention, as K Page said, a lot of people don't even we're very temporary thinking sometimes. We're thinking, oh, it doesn't matter until it matters. I don't care about it until I'm trying to get a house. But that one late payment can sit on your credit for 7 years. So you can be 30 years old still paying for something that you did when you were 21. So you have to be mindful.
Well, credit really is wrapped up in a lot of different things in our life when it comes to the house we live in, how much we're paying for rentals, how much we're paying for cars, car insurance, turning utilities on, even certain types of jobs. Because, like you said, if you have bad credit, you're probably not in a good financial position, which means you're more likely to do fraudulent activities or you can't be trusted. So there's even certain jobs and statuses that you can't even get in life if you have bad credit. And the good part is being at an early age of, when you're 18, just now getting out there, or in your early 20s working through, you can really do some stuff to take care of yourself. And it's almost as simple as, Serena, I like to explain maintaining good credit as just having good character, just being a person of integrity. Kalendra, could you see how character and credit relate to one another?
Yes. It's like sort of. Okay, so if you are more likely to be honest, then you're more likely to make a payment because you know that this person is looking for their payment.
What about you, George? Have you ever known that credit scores and character have a correlation with one another?
Yeah, I can definitely see how they tie in with each other, and that like responsibility, like taking that and knowing that you have to make this payment at this time every month and having the responsibility to do that shows what kind of person you are, at least in that facet of life.
So you're exactly right. So, we've been talking about credit as it relates to financial decisions. Now, as we move into talking about credit as it relates to, our lives and, what it says about that, I was doing some research the other day. Right? Let me get all up in your business. Do y'all want to be married one day? Y'all want to have a family?
At some point.
Mhm. Danae, you want to have a family?
Yes.
George, you going to be a husband, father one day?
Yes, sir.
All right, so we all, I hope get married too. So we're all sitting here wanting to, start a family and be married in our future. Well, if we're being honest, it doesn't take much to look around the world and see there's a lot of people that get divorces. I'm a divorcee. there's a lot of people that get married and those relationships don't last. Well, one of the there's three major things that generally break up a marriage, and they fall along the lines of sex, religion, and money. Money continues to be a huge determinant in whether a marriage or relationship stays healthy or long lasting. So, doing some research, right? And I found something on the Washington Post, and I'm gonna put this up. We're gonna read it, and let's see what it tells us. All right. So this is from the Washington Post, a new working paper from the Federal Reserve Board that looks at what role credit scores play in committed relationships suggests that daters might want to start using the metric as well. The researchers found that credit scores, or whatever personal qualities credit scores might represent, actually play a pretty big role in whether people form and stay in committed relationships. That's the good part. People with higher credit scores are more likely to form committed relationships and marriages and then stay in them. In addition, how well matched the couple's credit scores are initially is a good predictor of whether they stay together in the long term. Now, first reading that, how this, Kalindra, what's your how do you feel about this?
I think that makes a lot of sense.
George, what about you? How does that strike you?
I think I would agree with that, and it brings up some pretty good points. So
Serena, talk to me. What does that mean to you? It talks about higher credit scores are more likely to be in committed relationships, and people with similar credit scores are more likely to have a healthier relationship.
I agree. I agree. I think it makes a lot of sense because as both of you said, your character is based off of things that you do habitually. Like what does your day-to-day look like? Are you a person that's on top of your responsibilities? Do you even know when your bills are due? Are you consistently paying them at the same time? So of course, if you're committed to making sure that your foundation is together, you can commit to someone else. So makes sense to me.
Yeah, it absolutely does, because when you're looking at things that affect your credit, we're looking at our spending habits. We're looking at our ability to have patience. Using credit as a source of income, people that use credit as a source of income or debt as a source of income don't have the ability to be patient. They lack the ability to wait on something. Every time I pull my credit card out and go buy something, knowing that I don't already have the money in my account that I could have paid for it with, that's just saying, KP, you are too impatient to wait till you have the money to be able to afford this to be able to get it. So, as we saw, having high amounts of debt contribute to a lower credit score. Then you get those high amounts of debts, you're not paying them back on time, or you don't even know when they're due. That's only because you're irresponsible. And I don't know how y'all relationship like men, but responsible don't mix with irresponsible. Oil and water don't mix. It ain't gonna go together. Gosh, like it's almost like you hear stories about this. It's weird. You hear it as a young person, you don't believe it, and you become an adult. It's like, y'all really do this stuff? People that go on vacation and spend their rent money.
Yes.
People that go to the club and want to ball out there and then miss this payment. People that go buy cars that they can't really afford and now they go out and get repossessed. And those are habits that affect our credit score. Those are habits that affect our life. Like, Danae, I couldn't imagine what it would be like, Serena and Kalinda, y'all being women, if y'all are wives one day and you come home and ain't no electricity because the light bill ain't got paid because your spouse didn't have maturity to put that money towards that bill and is willing to bet that a person that would not prioritize their spending is going to also reflect in their credit, because the credit is going to tell a picture of that. If I'm not responsible with my money, my credit is going to be reflective in my credit. So I think when we're looking at the importance of credit, like it's also wrapped right into your life, right into even your relationship. I think, a little bit of dating advice on the day. I guess somewhere along the line, you need to ask the question: so, what's your credit look like? What's
Yeah.
what's your credit score? Like if we gonna go out, look, how about this? We're gonna go out and we're gonna pull this chart out, date one. Now, right now, I'm in the yellow range. I can deal with the orange, but if you pink or red, this ain't gonna work. So where you at? I'm looking for green, the clean green. Where you at? but,
Yeah. It comes
but
down to discipline. Can
mhm.
you tell yourself no? That's the big thing. Like, can you tell yourself no and wait? And then, even if you have extra money, should you use the extra money to go get those new pair of Jordans, or should you put that towards your credit card, or like just prioritizing and telling yourself no? It all comes down to discipline. But I absolutely agree, because sometimes we get so hung up in the butterflies, that honeymoon phase. Oh, she's hot. Oh, he's so cute. They make me laugh. We have fun. And then you're getting into this commitment, and then you realize that person lives with their mama and they're 30. They, their car got repossessed. So now they're riding the bus, or like all that stuff comes out, and you're like, okay, yeah, no. This can't work, because if one person is up here and one person is down here, what happens? Either this person has to come down to meet that person, or this person is going to have to come up. So it's not even. So that's absolutely a thing
Wow,
you should
what an
ask for
amazing
sure.
conversation that we just finished up today. Serena, thank you so much for those gems that you dropped on us that we can use and apply to our lives. George and Kalinger, thank you for investing your time and sharing it with Adulting 101 so that we can enrich your lives. And viewers at home, thank you so much for joining us. It is much appreciated, and I hope that you got something out of this amazing, impactful, informational conversation that we had today. Today with Serena, we finished up talking about the components of your FICO credit score, including types of credit that you might have, remember revolving and installment, and then we also talked about new credit, remember inquiries. Then we broke down what a good credit score is versus a bad credit score and the different things that you would be allowed to do. And we started into our conversation about credit as it relates to our lives as we talked about credit and relationships. Make sure you come back next week as we pick up right where we left off and finish this conversation about credit. And in part 3, we really dig into more about how credit relates to our lives, different areas of our lives. So you don't want to miss it. Make sure you come back and see it. Now, I need you to take an opportunity to reflect on the information that we went over today. Dropped a lot of gems, a lot of jewels, a lot of useful information. So you have that information, you have your life. You have things going on in your life, and now you're presented with this information. So your goal, you're going to get that out of reflecting, but your goal is to synthesize this information, to merge it together, and you're going to do that through application, taking what it is that you learned and directly applying it to your life, because these things are important, and you're absolutely going to be confronted with situations, if you haven't already, where this information will greatly help you. So make sure you do some reflection and application. Now, if you learned anything from this video, if it was beneficial to you in any way, we need you to share this video. We don't want to hoard this information to ourselves. Go ahead and share it with someone you love, someone you care about, someone that you know could benefit from having a better understanding of credit, either now or in the future. It's never too early to start learning good financial tips. Now, at the end of this, in the credits, you're going to see the contact information for Serena. If you need any help with financial planning, credit repair, or just would like to learn more about your credit, please reach out to her. She would be more than honored to hear from you. And you'll also see the contact information for Adulting 101 org. We would absolutely love to hear from you. You can check us out on Facebook, Instagram, YouTube. Our handle is at Adulting 101 org. And when you interact with us, use that hashtag #DoAdulting. Again, we would absolutely love to hear from you. And if you support the mission, if you support the cause of what Adulting 101 org has set out to do, please donate, please invest, sow a seed, help us to continue the work that we're trying to do that's so desperately needed in our younger generation. You know, they're going to be the next generation, and we need to make sure that they're well equipped to lead because they are the generation of the future, right? Now, thank you so much for, I didn't tell you how to give. Cash App, $DoAdulting, or you can go to the website doadulting.org and you'll find more ways to give there. Now, thank you so much for spending this time with us. And again, this was part 2, so make sure you come back next week to check out part 3 as we finish this amazing conversation. Peace.